Okay, so you have acknowledged this week that you are, if anything, short of copper in your portfolio and short of lithium in your portfolio. So people would naturally jump to the conclusion that they would be the areas that you may buy. But lithium prices are so depressed, people are closing mines down right now.
Yeah, that has. Don't forget, it's not a long time ago we had a very high lithium price, and that led to probably developing of too many mines, and therefore there's oversupply right now. So that's the kind of cyclicality of mining. But the good news, first of all, is that the major growth, organic growth that Rio has, is in copper and is in lithium. Right now, we are ramping up the world's fourth largest copper mine in Mongolia, Rio Tinto, and we will be producing first lithium from our newly developed mine in Argentina. So we already have organic growth, but yes, if the opportunity is there, we could look at gaining further assets. The good news is we actually have a number of projects waiting to be developed in copper, such as Resolution in the US, and we also have another lithium mine in Serbia, Jadar, that hopefully soon will be developed.
But I don't want to be an investment banker in telling you this, because I'm sure they've all told you, but if lithium prices are cheap right now, you have the opportunity to buy at cheap prices because you're there for the long term.
Well, first of all, we never know when we reach the bottom.
Nobody does, right?
That's the uncomfortable thing. And the other thing is, we also don't want to end up in a situation where we have more assets than we are capable of operating. One of the key things that we have as a management team done over the last 3.5 years following our 4 objectives has been about building the sufficient competences, amongst others, improved our project execution skills. And we're doing that much better today than we did in the past, but only to that extent that we cannot do too many things at the same time. Right now, we have just sanctioned the world's largest mining project in Guinea in Africa, and that does take quite a lot of resources. So it's a balance of challenging your organization but not overstretching it.
Because at the moment your return on the shareholders' capital is 19%, which is a very strong return on the shareholders' capital. You wouldn't want to do anything that was going to significantly dilute that return on the shareholders' capital.
We would definitely only go into projects that has a very decent return standalone. I completely agree with that. But it's not only the mathematics, it's much more about, do we have enough project engineers to do an extra project, for example?
Yeah. So you've mentioned the 3 key projects you have, the lithium in Argentina right now, you've got the iron ore in Mongolia, and in Guinea, and you've got the copper in Mongolia. So these are massive projects, but they show the global nature of Rio Tinto, the fact that you are a global company, that you are not based on Australia, you are not based on China necessarily, that you have options all over the world.
And yeah, absolutely, and we are investing an awful lot in Australia. Don't forget that our Pilbara operation is, of course, world scale. It's the world's largest iron ore business, and it requires a number of replacement mines. And above everything, we have secured the joint venture of Rhodes Ridge, but it's a bit of a longer term development. It will only be ready around 2030, but that would really be the backbone of our future iron ore business for the next 4 or 5 decades.
So is that iron ore, is the demand for that going to be there in a decade or so's time? Given the fact that China, you know that demand is ultimately going to slow there, so who is going to be wanting that iron ore in that scale in a decade's time?
Yeah, look, I of course cannot give any guarantees of the long term, but if you look at the trends, as long as the world economy is growing, there will be more steel demand. And what you see is very often, you see that development from a very poor developing country, where there's very little steel consumption, towards the development phase. And when you then reach, so to say, the maturity of the Western world, you actually don't use that much steel. China has just gone through that and is kind of at the peak level of steel consumption. But right now you see, for example, India growing a lot, and they have not reached that level. So we will see the steel consumption in India going up a lot in the years to come. And ultimately, right now, they rely upon iron ore from India, but over time they will have to import iron ore. So that will be an important source of future demand.
Okay, do you believe that politicians here and in other parts of the world understand that you are a global company, that you can have choice as to where you allocate your capital, that just because there happens to be a good prospect for a mine here in Australia doesn't necessarily mean that it gets the capital to go and exploit that? Is that something that politicians have to be aware of?
I do think that politicians understand this very well. Ultimately, of course, it's the choices. We try to work together to find a way where a solution can be competitive. It could be a mine. Australia has got a very strong mining sector, a less strong manufacturing sector, and Rio Tinto is both in mining and in manufacturing in Australia. The biggest challenge we have had is the manufacturing, and right now we have these very big aluminium smelters and aluminium refineries, Pacific Aluminium.
Why do you bother?
Well, I ultimately believe that if we find the right pathway forward and repower those assets, we can create shareholder value.
But do you think Australia's energy progress is on the right path to deliver the certainty to allow those plants to be economically viable?
I think Australia is struggling the same way as many Western countries, as most countries, in terms of basically addressing climate change is about electrifying society, and that means you need more electricity, and most grids are not following that development. But we are trying to do things proactively. You will see that we have underwritten the biggest solar farm in Australia and the biggest onshore wind farm in Australia. And right now we are trying to also find a solution for how to firm that energy so that you have electricity 24/7. You need that for an aluminium smelter. We're not entirely there, but we are really trying our best. We also feel a deep obligation, of course, to our staff. So we need to take those assets out of the discomfort zone, and I'm quite encouraged to see the progress.
Because in some ways it might be easy just to be a pure miner who just simply digs it up and sends it overseas, as distinct from trying to add value, which adds another layer of risk. Sure, it makes a profit if things work, but especially with the energy debate right now, it does add a layer of risk.
No, you're absolutely right. It's a societal choice, but you know, if you have the mining, if you can do some of the processing, you create more economic activity in the country. So it should be in the country's interest to have also the manufacturing. Ultimately, I have to make sure that we only invest in something that creates a return for our shareholders. But that's the kind of dialogue, and I think that's very, very important to have that. And I have that discussion with politicians in this country and in many other countries. How can we make sure that the manufacturing part is also competitive?
Because if it's not competitive here, and surely this is a message that you send to politicians in Australia, that you have the ability to pick your capital up and pick the jobs up and take them somewhere else.
Sure, that's not exactly how I phrase things, but if you...
Because you're a very polite person.
Well, I don't know, but if you think about it fundamentally, for example, an aluminium smelter, it's fundamentally about creating employment in Australia for an export goods. So it could be produced other places. And when it's for export, it's of course exposed to global pricing and global competitiveness. And if the energy is much cheaper in China or in the Middle East, it's going to be very, very difficult to have a viable business. But we should be both in the society's interest and in our company's interest to try to fight for making it competitive so that we have a viable business.
Jakob Stausholm, many thanks for your time.
Thank you.